Welcome traders to this educational video of Nifty Analysis, episode number 37. In my previous educational video, I had clearly mentioned that Nifty was in an uptrend. And if you see that this was the recent bottom which was made around at 10,800 levels. And after that, we had seen a very steep rally in Nifty. And it was necessary and also it was expected that market could have corrected a little bit after this a massive up move. But a gradual correction or a consolidation was expected or was necessary. Rather than that, what happened was on 15th October, which was astonishing for everyone, was a 290 points cut on that particular day. Now, due to this very massive red candle of 290 points in Nifty, there was a lot of questions, running in different traders' mind that is this an up, is this an end of an uptrend, or we are starting a new downtrend, or what is happening in the market basically. When I analyze properly, and I had already shared in my episode number 36, you can go and check on my channel. I had clearly shared that Nifty remains in an uptrend. And if we manage to close, I guess if I'm not wrong, I had made the second video or either on the 19th or on the 20th October. And I clearly mentioned that if we manage to close above 11,900 levels, then I had given three different levels on the upside, which could be tested. Out of that, one was tested, which was around 12,000 levels. And I had clearly mentioned that due to this big red candle, which was made on this day, which is 15th of October, the 290 point cut, it is pretty much possible that the shadow of this fall, because at times what happens, people do not forget the fear factor of the market, and it is possible that if this particular correction continues after a few days, then there are few levels on the downside which could be tested. And out of that, the funny part is that even the level on the downside was achieved, and I guess it was around 11,550 or 11,530, somewhere around that. Now, after that level was tested, things have turned around, and even a big event is coming up. The US presidential elections are coming up. So it's very important that we understand where markets are heading. And to do that, as always, I would like to first analyze the weekly time frame. In the weekly time frame, we can clearly see in the last 3 months, I would not consider this particular candle because it's still 11th of November, and this candle is not yet complete. But apart from this, if I see these three candles, we can see an inverted hammer like a shooting star. Then we have a hanging man and again a shooting star. So more or less what we can see is market was range bound. It was choppy. It was a little bit confused. It did not know where it want to go. Apart from that, we can see market is in a smooth uptrend. It's above the 50-month simple moving average. And even the MACD has given a crossover in the month of November. But obviously, yes, this will be taken into consideration once we have a month end to this particular candle, because we don't know what's going to be the closing rate of this particular candle. All right. RSI is also decently going up. So I think there are no issues in this particular chart. Now let us go to the weekly time frame. In the weekly time frame, I had mentioned that there was one small thing which I had seen in my previous video also, and that was the negative divergence. I can share with all of you. 1 second. You can see that the price is making higher high and the RSI is actually making a lower high. But according to me, somehow this negative divergence is not extremely powerful due to some reasons. Yes, it is a negative divergence, but not extremely powerful. It is an average negative divergence according to me. And after this divergence, if it was that powerful, we could have seen a big correction, and possibly, if this level was broken 10,800 on a weekly basis, then we could have seen a very big correction. But none of that such stuff has happened in the market. And if you see the MACD, you can clearly see that some sort of squeeze is happening over here, and market is possibly in a range. Even on my Twitter handle, I had clearly mentioned that market is, in a range. I'll just drop this line. market is just in a range. Basically, can see this entire range. This is the upper side and this is the downside. So basically in last 1 month we can see market is just going up and down and nothing is happened more than that. So overall it is in an uptrend. It is choppy. There is a negative divergence. But if volatility is continuously falling down, then the chances of correction will diminish with time. That is how negative divergence get negated in bull runs. Now, the main thing, the main bullish sentiment which I can see in this all three time frames is the daily chart. Now, what has happened is we need to understand that we have these two hammers. These two hammers look pretty decently powerful. Also, we have a trend line breakout in the RSI, which signifies that upside momentum is coming up in the market. And yeah, the MACD has not yet given a positive crossover, but we should not forget MACD is a lagging indicator. If price continues to move on, automatically after a while it will show its positive crossover. Now, one more thing which I can see is that this particular hammer which has been made, both these hammers, they have been made on very important levels. First of all, I can see this 50 days simple moving average which is acting as a support. Also, I would like to share that this particular high, this is the previous high which we can see, this is acting as a support. All right, this previous high when market was going up was acting as a resistance, and always resistance becomes support, role reversal at play. So that particular variable of technical analysis is working over here, and market has come down, taken support, and it's going up. And especially last 2 days and especially today's candle, we can see it's a big green candle. So overall the entire setup is looking pretty decent. But once again, we should not forget that this is the level from where market is not able to surpass. This is a resistance. 12,000, 12,020, 12,030 is a very stiff resistance for the market in the short term. So according to me, if markets manage to close above 12,030 levels for a day or maybe 2 days, then we could test levels like 12,150, 12,160, and on a higher side we could also test 12,300 levels. And do not forget one thing, that due to important events are coming up, there could be a possibility, I'm not saying there will be, but there could be a possibility of a little bit increment in volatility in the market. So if you're trading, be careful that your position sizing, you do it very, very carefully. If necessary, then do decrease your position sizing. So your risk management should be your first and important thing that needs to be taken care of, rather than generating profits in the market. All right. So do not forget the levels. I am repeating it once again for all of you. If the Nifty spot manages to close about 12,030 for a day or two, then there will be a possibility that it could test 12,150, 12,160. And my second level, which could be tested from my side, will be 12,300 levels. Now, if you find this video useful, educational for you, do share with other people also who might find this video important and educational for them also. And do let me know by your comments below, how did you find my video? Thank you. Trade well.